we obviously have to talk about the Mueller report.
Sure.
Are you surprised there's not more of a positive reaction, given the fact that it may not be, as Ben said, the all clear, but it is in many ways ending?
Yeah, I would tell you this. I don't know if I have put the Mueller investigation, any of my notes over the last 22 months, as a market moving thing. Now, it's always been in the background. It's always been that, oh, you know, this investigation is right around the corner. At any point in time, we could find out about this. But the one thing that we've always said about this, it probably doesn't lead to an impeachment. It could lead to an impeachment proceeding, which could be disruptive in the markets. But I really didn't ever see this as having been priced into the market. So taking it out.
By the way, you and many others too, because I can't remember, maybe there are, but I can't remember any market guest that has come on Worldwide Exchange or other shows that I've watched or listened to on CNBC who has said the Mueller investigation will ultimately be a big net negative for the market. Is that why we're not seeing it be a net positive? By the fact that it doesn't appear there's going to be much more going on.
You don't have that equal and opposite reaction to have, because now that it's gone, or at least it's diminished a great deal. I will tell you this, what might get interesting, and the one thing we're the most concerned about is the negotiations with China. What might get interesting is an emboldened administration versus a China that says, maybe we were waiting for something bad to happen. There may be the possibility that this puts us in a better place in the U.S.-China trade talks. I think that
maybe, but the markets aren't saying that. Dow futures are down. They're not down as much as they were, but they are down. You've got a negative German Bund. You've got low Australian yields. We're going to get to that a little bit later on in the show. You've got Japan falling 3% overnight. The market is concerned about global growth.
100%. And then that very much the case of what happened last week and what happened on Friday. It's a very mild inversion of the yield curve, but the global flash PMIs came out on Friday, and none of them look good. And for a market that's already concerned about a slowing global economy, that was not good news for us Friday, and that's why we had that. You weren't here, but Friday was messy.
Oh, I was paying it. Believe me, I was paying attention. I told my family we're going to McDonald's, we're not going to Sizzler because things have changed. Here's the thing. Does the Fed cut rates this year? Not raise them.
Right.
Does the Fed cut them?
There is as good a chance that the Fed raises rates or cuts rates this year. And I think that is why we're exactly where we are. We're at neutral, and there's nothing on the scoreboard in terms of the dot plots. And I think the reason for that is the Fed knows this could accelerate and get worse in terms of the global economy, or we could actually see a inflection point in the second quarter where things actually get better. I think everything sort of hinges on whether or not we get the U.S.-China trade talks behind us in the first half of this year, because I think some of that will manifest itself in better economic activity.
Sounds like you believe, Art, that China trade, U.S. deal is the big thing for our viewers and their money.
I certainly do, and I think we're getting closer to the end than we are to the beginning, and I think that happens in the first half. Put that behind us, make tariffs go away, don't escalate with Europe on autos, and I think you'll have better economic activity. Not great. I think we're downshifting from an economy that was something like 3% last year to something like 2% this year. It's not a recession, but I think we need to get trade.
Gronkowski's gone. Now we got to focus on the next thing. Now